Welcome to the Buy to Let Show, the only programme which gives you all the information you need to know whether you are thinking about buy to let for the first time or are an existing investor and landlord. We've already considered whether buy to let is still a viable investment and identified that the way you finance and cover your investment is key. So in this show, we are exploring the role of finance and insurance. When you live in a home yourself, you will occupy it most of the time, except if you go away, for example, on holiday. The lender or insurance company knows who you are and will have done some background history checks on you, such as credit checks. When you let a property, though, you are seen as someone running a business who will be having people paying to live in the property that the lender and insurer will only have limited information on. This means they consider a let property to be more risky from a lending and insurance perspective. So you will need specialist products and services to make sure you are covered as a landlord. For example, as a buy-to-let investor, you may be reliant on the tenant paying the rent to afford the mortgage. So they have to take into account the increased risk of rent not being paid. Although some insurers will offer rent guarantee insurance to cover this risk for you. Other risks insurers have to consider are the property being empty for a month or more if you struggle to find a tenant or have to carry out repairs to let the property legally and safely. As a landlord, you may not realise that one of your risks should cover yourself for is tenants or even their guests making a claim against you if there is an accident in the property. So, financing and insuring a property you let is very different to organising a mortgage or cover for your own home. As a result, if you end up letting your home, it is essential to let your existing lender know in writing and take out specialist landlord insurance. Now you know more about the financial risks of being a landlord and importantly how to cover yourself through insurance, we can now take a look at how to finance your property purchase and the costs involved in buying and managing a buy-to-let property. Two of the key issues I see landlords having, trying to organise a mortgage themselves and some not considering having a mortgage at all, investing with cash ongoing. To explain more about why it's worth considering seeking expert advice when organising a buy-to-let mortgage, let's hear from Rupert Swetman, Head of Lending for Which Mortgage Advisors. So Rupert, you're from Which Mortgage Advisors and you're the Head of Lending. So help us out from a landlord perspective. Why a buy-to-let mortgage is different to an ordinary home loan?
Yeah, I guess lenders will view them as slightly higher risk. As a customer, you're not living in that property, looking after the property. You've got people in there that you might not necessarily know who are paying you to live in that property. So along with that comes some different products and different criteria, particularly around the amount of security that you need to have in that property. So deposit size will be a lot greater, so on average 25% deposit needed. There might be some slight variance to that. They will also pay more attention to the rental income as opposed to affordability and how much can be borrowed. And they will have various stress tests and methods that they calculate this, and that will determine the amount you can borrow as opposed to how much you earn in your personal income.
Oh, what's a stress test?
It's an interesting one, and there have been some significant changes recently, but they are going to look at whether that rental that you receive will cover that mortgage payment and by what margin and at what rate. So what they want to do is ensure the borrower's not getting into problems that they're going to have, they're not going to have enough to cover the mortgage basically from the rent.
So if you're a landlord and you're remortgaging or you're going and doing a buy-to-let for the first time, how do you know how to choose a broker?
Firstly, I think it's very important when you're looking at buy-to-let that you do go to a broker. There are numerous lenders that you can't go to directly, so by not going to a broker, you might well be missing out on some really suitable products or the right product for you, which is really important. We've talked about the stress testing, we've talked about different criteria, varying to residential criteria, so it's really important that you speak to someone that's got an expert knowledge in that and knows which lenders might be more suitable for you. It's a bit more of a minefield in the residential mortgage, just because of every lender might have different stress tests, so it might not work with the one you go to on the high street, but it could work with someone else. So it's really important to speak to someone that looks across every lender out there.
So I guess it is important to have an expert, because you might be buying to renovate and then letting it later on, or letting your own home. So that's kind of why you need the expert guidance.
Definitely. For some people, first-time landlords, it's a big step, and they probably need some guidance, and there are other people to speak to, but a mortgage advisor will have that knowledge, will have dealt with a lot of people in the same situation, and will know what the right solution is for that customer.
I suppose from a buy-to-let perspective, there may be times when you've got to buy something and you get a deal, but it's got to be done by a deadline. Is that still possible in the mortgage lending world?
I think so, and that's again why a broker is really important, because most brokers will monitor the timescales that each lender has. You might have some that need paper applications, which can take longer, some that will be quicker than others, some will instruct valuations immediately, some will wait till it's underwritten. So again, that knowledge from an independent and impartial advisor is really important.
First things first, as a landlord, let's understand what you need to insure and why. I'm joined by Christina Dimitrov from Direct Line, who better to help guide us through the different elements of insurance landlords need to consider. So, Christina, could you kind of talk us through the basics of what I need to think about?
So, Kate, I'd like to start with really what's the difference between home and landlord insurance. As somebody who buys home insurance, you are insuring something that you personally own, and in a way, you yourself are the risk. Whereas when you talk about landlord insurance, this is not your personal belongings that you insure, but it's an investment. So what it is that you do via buying insurance is you're effectively protecting your investment. And that's when the major differences start coming in. So, and I can clarify that a bit more when I talk about your tenants. Your tenants are a third party. They are also paying customers.
Of course.
And because they're paying, they have duties, of course, but they also have certain rights. And they're very different from somebody who occupies their own home. And to give you an example, if there is a fire that causes damage to the property you're renting out, your tenants need to live somewhere else temporarily, then your insurance, your landlord insurance, will be able to cover this temporary accommodation until the damage has been fixed and the tenants can move back in. This is something that home insurance wouldn't provide. So what I'd like to do is I'm going to run you through the most frequent covers that you'll need, and I'll just tell you the difference between home and landlord insurance.
Fantastic.
So we'll start with the, really well-known traditional covers. We've got buildings cover and contents cover. So buildings cover really is all about the structure of the building and anything that's fixed inside the building that you can't just move away, but that you'd have to almost rip off. So we've got carpets on the floor. We've got certain fixed kitchens or a fixed bath. These are the things that a buildings cover provides. So any damage that's caused to them, accidental damage, is covered by that. Now, on the other hand, we've got contents insurance. For example, if you provide your tenant with a freestanding fridge or a TV or maybe even some furniture, that would be covered by contents insurance. And that's kind of similar to home insurance. But then comes another element, which is public liability. So public liability generally refers to a third party that wasn't involved in an accident, but that caused it.
Right.
So a tenant slips over some sort of loose bit of carpet. He has already informed you that this bit has been loose. So you as a landlord know about it, but you haven't been able to fix it. You didn't come, I don't know, something happened. Then your tenant fell over. He or she hurt themselves, and they also broke grandma's china. So we've got two sorts of damages that you are responsible for. We've got an injury to the person, and we've got damage to something that belongs to.
Tenant owns.
Exactly, and it's a financial damage. So they could make a claim against you for both of these things. They might demand compensation, and that might cause some legal proceedings. Any of that would be covered by public liability. So you need to have that as a landlord. It really is essential. The other bit is there is a number of, we call it mostly it's optional covers. By optional covers, what we mean in insurance is they're not added as standard. And the reason we don't add them as standard is because they're usually a little higher priced, and maybe it's something that doesn't happen so often. But if it does happen, it's likely to hurt you a lot. So you should really consider these covers for your personal situation. One example is rent guarantee, and it's often linked to another cover called legal expenses. So if your tenant has not been able to pay their rent, and you still want to secure your rental income because it is an income for you. So what rent guarantee does is it allows you to still receive your income, and that's being paid to you by your insurance until your tenant can pay again and is out of the arrears. Now, if the situation gets worse, your tenant can't pay at all anymore, anything happens, the legal expenses bit will help you with gaining repossession of the property, of getting the tenant out, evicting them off the property. And now, again, if the property needs some sort of repair work, then rent guarantee would cover your lost rent whilst you are repairing that property. So it's a very useful cover, something that you should consider. And the other one that I think is quite notable is the one that's called malicious damage. So
sounds quite scary.
It sounds scary, and there's two different types, and you need to be aware when you buy your insurance by that. Often malicious damage by third parties is provided as standard, but malicious damage by tenants is something you might have to buy as an add-on.
I see.
So that's really when something is damaged inside your property, but it wasn't accidental. It was something that was done deliberately to cause you damage. It can be of various types: broken down furniture, destroyed baths. So this really covers you if the tenant has caused this damage, it's been deliberate, you need to repair it, and again, your insurer does jump in. So you can see that landlord insurance is so much wider than home insurance, and the issues that a landlord insurer would deal with are much more complex.
Thanks, Christina. Tremendously helpful to know the different types of cover landlords should consider. Now, having explained the basics of financing and covering your buy-to-let, I spoke to Carrie Alliston, Head of Lettings for Hunters Agents, to explain the costs of buy-to-let and how they impact on property management. So, Carrie, you're Head of Lettings for Hunters Agents. We've got a list of costs that I've put together that buy-to-let landlords are going to have to pay out when buying and managing a property. And I wanted to run through some of these with you. So when you're buying, you've got things like deposit, legal fees, mortgage fees, of course the 3% stamp duty now if it's a second home. But the one I wanted to talk to you about is the survey fee, because it tells you what maintenance payments they're going to have to pay out, doesn't it?
That's right, yes. It's really important to have that done, because what they need to do is realise at the beginning what it is that might be required works-wise to the property to have the safest property, the best property that you can have for a tenant, good quality. I think it's really important to know what works might be required so that they can budget what they might need to spend to bring it up to standard, whether that's in terms of furnishings or how it looks, but also really importantly from a safety aspect. So it's really, worthwhile having it and spending the money on it so that they know what's going to be coming up in the future.
So when it comes to gas and electrical safety certificates, gas is a must, but electricity is a little bit more grey.
The gas safety checks is a legal responsibility, so that has to be done at the beginning of the tenancy, if there isn't one in place already, and then that has to be checked annually by a contractor that is gas safe registered. So it's important to check that that's the case and factor in that cost. In terms of the electrics, I think that's just as important. It is a bit of a grey area, it can be, but we feel that it's not. A test should be done on the portable appliances and the property itself to make sure it's safe for someone to live in. You don't want people getting electrocuted, and especially you don't want appliances blowing up. That's not safe and it's not good practice.
So one of the other questions is about putting money aside for renovation for a property before you let. What sorts of things are you going to have to do so that it's legally let to a tenant?
You take into account the age of the property and then think about what's going to be required. If you're looking at electrics, they might need rewiring in the future. You think of guttering, roofs.
Guttering's a great one, because there's always see a lot of leaking gutters around everywhere.
Absolutely. And you've got to think of the knock-on effect to the tenant living there, but also for the landlord themselves in terms of the cost for repairing or replacing those sorts of things. If it's not done, the additional damage that can cause.
And I guess that affects the value. So if it's costing a few quid to get it fixed early on, better to do that than lose thousands of pounds off the value of your home.
The other thing to think about with broken or damaged guttering, it might mean that a let might not happen as quickly as you hoped.
So the next question is about utilities. When it comes to gas, electrics, water, whose responsibility is that? Is it all the landlords or does the tenant pay?
The tenant is responsible for the payment of the utilities once they've moved in. Until that point, the landlord has to pay for it whilst it's empty. Some council tax offices will have different schemes of whether it's empty or not, whether it's furnished or not, but the landlord is responsible until the tenant moves out, and then after the tenant moves out. There are occasions where landlords will do a rent inclusive of bills, but that's not as normal as otherwise.
And how do you manage, so can the tenant just choose, can they change the electrics or do they have to get a landlord's permission?
To change the supplier, normally they should seek permission, just so that the landlord is aware of who the supplier is, so that when the tenant moves out, they know who it is, so that they can then make sure that they're paying the bills as they should be.
The other question, which I think is quite a big one, is when it comes to maintenance. So we kind of spoke about that earlier on, but maintenance, I think, is absolutely key. Not all landlords put money aside for that, do they?
The maintenance side of things can be more difficult, but I think most landlords are professional and they realise their responsibilities. Things like fixing boilers, making sure they've got heating, hot water, looking after the roof, even down to things if the shelf falls down. You know, it's making sure that those things are sorted out because, you know, that's going to get you a good relationship with your tenant ongoing.
Okay, and I guess what landlords need to think about is that it's not a cost, but it's an investment that helps hold the value of the property, which is quite important, isn't it?
It is, of course, yes, because also, you know, a tenant that is looked after will also look after the property. So when that tenant moves out, it is an investment, because when you want to re-let the property, it's already usually in a good condition because the tenants have cared for it.
And that leads us neatly on to the final thing, which is voids when the property is empty. So that's quite a big issue, isn't it? If it's not in good condition, it may take you longer to let that property.
A month or two voids are highly unusual,
right.
Definitely. We typically will re-let a property with only a week to 10 days in between.
If it's in good condition?
If it's in good condition, yeah. The way I always think about it when I speak to landlords is, would you live there? And that's kind of the standard that you need to have in your mind when you're looking at putting the property on the market the first time, the second time and the third time, however long that might go on. And if it's been well maintained, that's going to be so much easier. Your agent is there to help you with those sorts of things. They're your eyes and ears, so thinking about the maintenance as an ongoing responsibility and job is going to pay off for you.
There are lots of things to consider when you invest in buy-to-let, from the marketing of your property to making sure you get financing and insurance right and have money for maintenance. Coming up, I'll be talking to three of the industry's leading experts to find out more.
You're watching the Buy-to-Let show, and we've been looking at the role of finance and insurance in buy-to-let. Joining me now is Rupert Swetman from Which Mortgage Advisors, Christina Dimitrov from Direct Line, and Tim Bishop from Bonallack and Bishop Solicitors. Hi, everybody. So, my first question, very much to yourself, Rupert and Christina. If I'm an investor, how do I go about choosing the right broker and indeed choosing the right insurance company? Rupert, perhaps you can kick us off.
Yeah, sure. I think it's very important you find a broker that can look at all the products across the whole market. There are a lot of products available, and some of those aren't available to the customer directly. So a broker will have expert knowledge on what might be the best solution for them. It's also important that you find out how that broker is remunerated, because you want to find the right product for the investor, not for the commission for the broker.
Good point. And Christina, from your side of things, there's so many insurance companies out there, there's so many offerings. What do I do as a landlord? What should I be looking for?
So, Kate, I think it's essential to, before you start looking for insurance, be clear about one thing. This is an investment for you. Your property is not just your personal home. So what you need to do is you need to protect your investment, and you need to protect something that's possibly your income, right? Maybe your only income. So what you need to do is you need to be aware that landlord insurance and home insurance are two very different things. They cover different risks. And one way of understanding that is you've got tenants, but these tenants are effectively paying customers.
So like a business?
A bit like a business, exactly. And because it's a business, these people that are paying you something, they have different demands, but they're also a bit of a different risk. So I'll give you an example. We've got, of course, buildings and contents cover. So far, so good. Home and landlord insurance are quite similar. They cover the structure, they cover anything you might have inside the property and provide to the tenant. But beyond that, landlord insurance, for example, provides you with public liability cover. So if an accident happens in your property, you're responsible for that accident, and there may be a claim against you, public liability would cover you. That's not included in home insurance.
Okay, so that's like trips, slips and falls, that kind of thing?
Trips, falls, or some sort of leak that makes damage to a sort of neighbouring property.
Okay.
But also, you think about rental income again. It may be that your tenant can't pay the rent temporarily or permanently. So a good landlord insurer may provide you a cover to secure your rental income, and they might even pay for an eviction process that may be inevitable in some cases.
It's going to be very costly.
It could be very costly, it could be very stressful. So really, if you want to protect your investment, your time, so you can dedicate yourself fully to other things and your income, I think you really need to have a good look at all the elements that your insurer provides.
Okay, that's really helpful. And Tim, you deal on the legal side, so you're dealing with the buy-to-let investor on the one hand and then lenders, insurance companies. What, from your perspective, should investors think about when choosing a broker and an insurance company?
Well, I think one of the things, particularly with insurance, is speed. And certainly that's one thing the buy-to-let landlord can do to help themselves, is actually making sure they get the insurance policy sorted at an early stage and with the solicitor before exchange. Otherwise the process is slow enough as it is, and that can be very frustrating. And so getting that simple step done, that can help. And with regard to brokers, I think it's very important to get the whole of the market, but in particular we'd always suggest that going to a specialist broker, because there are many brokers out there who will deal largely with Mr. and Mrs. Jones buying their ideal home. They won't have quite the same interests as someone who's looking to buy as an investment. So therefore I'd always suggest that when picking a broker, you find someone who really understands the buy-to-let market.
Okay, and works in it on a sort of day-to-day basis.
Absolutely.
As opposed to a one-off. And how often do you feel people should review their mortgage or insurance? Christina, perhaps you can help us with that.
So if in the UK market, most insurance contracts are for about a year. And so you should review them at least once a year when you're looking to renew or maybe switch insurer. But the other thing you mustn't forget as a landlord is your circumstances might change. Cool. And when your circumstances change, your risk changes as well. So what you need to do is, when something like that happens, and I'll give you an example of that, you may have new tenants. Now, your previous tenants may have been full-time employees. Your new tenants are students and they're occupying individual rooms on your property. It's a very different risk. So the insurer needs to be informed about this. Or you carry out some essential maintenance works to your home that possibly change the structure, the quality of your home. Again, you might want to let your insurer know about this, and it can even be to your advantage. It may even lower your premium in some cases. But the one thing we always remind customers about, if your property is unoccupied for more than 30 days, essentially most insurers will have additional restrictions, additional conditions and rules and demands. So it's quite important to let them know about this so they can let you know what it is that you need to make sure, just in case you have a claim.
Yeah. So every time something changes, just clock in your head, should I let my insurance company know?
Exactly. Even if it feels very small to you, maybe just give them a ring, they will help you. It can't really hurt you at all to do that.
Okay, well, cover you better, I guess.
Exactly.
Yeah, okay. And from a broker's side, I mean, what do people tend to do and what should they be doing?
But I think one of the advantages of using a broker is that they should get back in touch with you if you're coming to the end of a fixed term, for example, and you would hope to do that 4 months prior to it. But I think you should always review it. And again, if there's a change of circumstances, speak to your broker to discuss what you might do moving forward and when you might be able to change what you do.
So I guess if you started off full employment and you've now made your money and you're self-employed effectively, that's a time when you've got to let everybody know.
Exactly.
Okay. And question to everybody, Tim, we'll start with you. What do you think landlords tend to cut corners on that they shouldn't?
I think they usually start off okay because they get the assured tenancy right, but then after that sometimes they can cut corners by trying to do notices themselves. So for example, if people are in arrears or there's questions of forfeiture, they try to do the whole process themselves, and actually it's not quite as simple as it looks. And if you get it wrong, you have to start from the beginning again, and that can really prove very, very expensive. So I think it's well worth taking some initial legal advice just to make sure you're going in the right direction.
Okay, that's helpful. Christina, what's your thoughts?
One big thing for us is careful tenant referencing. A lot of people think it's just, going quickly for a checklist. But the one thing you have to bear in mind is it's really more than that. You need to do a bit more in-depth research, get to know your tenants better. What that means is, for example, credit history, a credit check that shows you, are these people solvent? Will they be able to pay their rent in the long term? Get even a reference from the previous landlord. Was that a positive experience? Because we understand landlords are keen to get the tenants in quickly, to start, getting the rental income. But really, like Rupert said before, don't cut corners, wait a little longer, and then your income will start flowing and it will be a better long-term experience.
Okay, that's really helpful. And Rupert, your thoughts?
I think it goes back to reviewing your mortgage. When you come to the end of a fixed period, the lender will give you an option, in most cases, just to do a product switch. That might be the easiest option, but it might not be the best. So review what you can do.
Right, OK. And because I think lenders review their mortgages very regularly, something like every 3 months.
And they'll definitely come back to you with some options coming close to the end of your fixed period. But like I say, it might not be the best, and the market will have changed in that period of time. So review it, and if it is the right thing, you'll be told to do that. OK, that's fantastic. Well, thanks ever so much. It's really, really helpful. So that's it for now from the Buy to Let show. Thanks to my guests, and don't forget you can see all of our programmes online to find out everything you need to know about Buy to Let. Join me next time. Bye for now.
Here on the Buy to Let show, we aim to bring you all the information you need to run a successful buy to let. You can find more advice and help by following these links. And you can download our special ebook, which goes with the programme.